Welcome to another week in review. We're looking at the trading week of September 15th, 2025, and it is a doozy. So, I'm going to go through data quickly just before we start looking at the charts here. It is also roll week. So, we have September contract expiry rolling over to December contract expiring. So, U to Z or Z if you're American. That also complicates things a little bit in the sense of volume is going to be split between the two contracts as they, start to roll over, which can make trading conditions difficult. So these weeks can be challenging. I find them challenging sometimes just because, a lot of the things and a lot of what my systems look for is volume and speed of tape and deviations, etc. And all those kind of change a little bit, and they're not as accurate when we have volume splitting between the two, basically rolling over. So this can be a little bit of a challenging week for me. So my trades are generally fairly limited. I said on Friday that I, probably wouldn't trade the indexes this week, which is probably a lie. Let's be serious. There's probably going to be something that I trade on here, but as far as my primary focus, I'm probably going to be more focused on oil this week personally, but we're going to go through the indexes and at least, where I think there might be some setups. So going into Monday, we don't really have much. We have Empire State Manufacturing Index at 8:30 a.m. Nothing really to bother with there, I wouldn't think. Tuesday, we do have retail sales at 8:30, so that is important. We could get some market volatility from retail sales. Wednesday is the big one. So 10:30 a.m. on Wednesday, we have crude oil inventories if you're trading crude, which again, I probably am mostly focusing on. 2 p.m. we have FOMC, we have the rate decision, and then 2:30 p.m. we have the presser, and then Powell speaking, which I think will be, the statement comes out at 2, so we'll know pretty much everything he's saying at 2 p.m., but it's going to be interesting to see how the market reacts and how the Fed swaps markets move, because there's a couple unknowns here. The market's expecting a 25 basis point cut. Obviously, there's talk of a 50 basis point cut. If the Fed does end up cutting anything more, either leaving the rate unchanged or cutting anything more than what's expected, then we could have an outsized move. And whether that's up or down, I honestly don't know. The big thing that I'm basically watching on Wednesday is, the market is expecting a 25 basis point cut. Is that what we get? And if it isn't, so either rates stay the same, or if it's larger, do we get a larger directional move that we could potentially work from? So that'll be Wednesday. Thursday, we have jobless claims at 8:30 a.m. And then Friday, we have no real major data, and we're outside of earnings as well, so we don't really have much to pay attention to there either. So going into this week, we've looked at this chart a few times. I use this to kind of check myself. This is the daily time frame. I use this to kind of check myself every week when I go in and just see, where are we trading in relation to, some higher time frame areas. We basically are trading into, this has been this range, this 2024 to 2025 larger balance range that we broke out of, broke down from, broke back through. Again, I've been using this as a pretty major range to basically give some projections on, upside and downside targets. So we hit 150% of this balance range. This is a monthly balance range, so obviously ranges on higher time frames are more impactful. So we hit 150% of this. We also found bids below it, and then now we're starting to trade into about 200% of this balance range, and we're getting back into, again, 2 standard deviations away from yearly VWAP, which is this blue line right here. So I don't get super bullish when we start getting into, these huge extensions away from, prior large trading ranges. I don't get super bullish when we're, getting really extended into multiple deviations away from yearly mean. So for me, I think just being conscious of the fact that, we do have these ranges up here, this 6620 to basically 6650 range, where Z contracts settled on Friday, is going to be pretty impactful in the market. And if we do end up breaking away and we get some gas to the upside, then we could, go full on melt up mode, especially if there's, a rate decision, especially if the rate decision affects that and we get some outsized move to the upside. It's entirely possible. I'll be the first to say, this is the first time in a while where I don't have any expectations at all this week. I'm looking at this from the perspective of the daily, weekly, monthly are all one-time framing higher. So we have value being framed higher. We have price being framed higher. We have a massive implication or a massive catalyst this week with the rate decision, whether or not it's as expected, and whether or not the market reacts and tries to continue to go higher on that, or whether or not it's something that is outside of what's expected, i.e., no cut or a 50 basis point cut, and we have some sort of adverse reaction or upside reaction that's outside of the scope of what's looking to be priced in currently. And the other thing too is that when we start getting super stretched into these higher time frame levels, again, my thought process is we can obviously go higher. The market goes up and to the right 90% of the time, but at the same time, I have to be smart where I want to manage risk and where I want to potentially look for intraday long trades if we're getting up into these really stretched areas. So if we look at this on a shorter time frame, this is the 30-minute. So this is U contract. So this is September contract. We have a very thin week last week. So we shifted weekly POC up into the highs. We also settled Friday in the weekly settlement around the weekly POC. So we'll call it 65.88 for simplicity. Friday's low and where we consolidated was 125% away from this huge prior weekly balance range that we talked about last week and we've been trading around. So we were able to finally break outside of weekly balance. We closed the week outside balance. We framed multiple days value higher. We framed weekly value higher, outside balance. All good things from a buyer's perspective. Buyers basically on every time frame are controlling the auction at this moment. So I'm cautious this week, again, because of the reasons stated earlier, but at the same time, you have to take into consideration that, buyers have been able to continue framing higher, continue breaking out on higher time frames. And it's not until we see potentially a catalyst to take us down or, a real seller up into these highs that, takes us back below balance, so back below 55.40s, that we could potentially have, a larger correctional move. So early on Monday, my chart's roll when volume at settlement is higher. So that'll be Tuesday. So Monday I'll be trading September contract if I actually do trade the indexes. So I'll be looking, the first place I'll be looking will be weekly POC and Friday's low. So basically 65.88s to 65.83s. I'm going to use this area right here. If we see follow through below Friday's low, and especially if we see follow through below the overnight low from Friday at 76s, then I think what we're likely to see on Monday is probably just backfilling this big LVN we have right here, and probably coming back into last week's VWAP. So Thursday's low, basically taking back this P profile. Liquidating these is very common. And also not very difficult because we don't have a lot of structure. We have a lot of unfilled single prints in Thursday's range. So if we start trading below the 65.83 level, then I think there could be a decent short trade to basically backfill down and potentially back test the weekly breakout area and last week's VWAP at 65.40s. And this could absolutely be a dip buy down here as well. So again, this level right here, the 65.40s on U contract, this is the huge weekly balance that we just broke out of. So it's 4-week balance we broke out of, which was sitting on top of a 6-week balance. So a big range on top of a big range, framing value higher. This could easily be a nice little dip buy. So if we start seeing selling exhaustion down into 65.40s or potentially down all the way into this poor low and August highs down into 65.20s, this 40 to 20 range. If we see selling exhaustion down here and we see nice lifts away and we start closing time frames back above 65.40s, then this could be a nice long trade to get that dip and continuation higher and get us up into the 66.30 area. The flip side to this too is that if we immediately see this just yeet off open, so if we start accepting right away over last week's high at 66.05s, I'm probably going to want to stay on the long side and try and fill in this final some of these final range extensions at 66.30s and potentially test Z contracts settlement at 66.45s. So basically above last week's high, I would want to stay on the long side. I'm open to potentially fading fails up into the 30 to 45 range, but I think if we're accepting above 66.05s, then the likelihood of testing settlement from Friday on Z contract and 66.45s is probably pretty likely. And again, this is also corresponding to those big levels on higher time frames I was talking about at the beginning of this video. So I think we could get it potentially a decent long trade up here, and then potentially there might be a fade up into 40s to this 30 to 40 range. The flip side to that too is that we fail last week's high. So there's two shorts I'm interested in I guess three, but there's two short setups I'd be immediately interested in. One would be, a pop and fail above last week's high. So if we see, buying exhaustion again start to take hold right above last week's high and we fail back below last week's high, then I think that a rotation could again be a short trade to get us back into Friday's low and fill in this poor structure that we have from last week, or offering below 65 88s to 83s. So a nice look above and fail of last week's high, or even just waiting to see if we offer Friday's low at 65 83s could get us down and fill in this structure. So basically, we accept above last week's high. I'll look for those long trades, continuations to 66.30s to 45s. And then if we accept below Friday's low, I'll look for that short to get us back into filling in this poor structure that we have, these multiple single prints that we have, and fill in this P-shaped profile, liquidate back down potentially to test the breakout at 65.40s early on. So NASDAQ is very similar. My only real, I haven't plotted Z contract on NASDAQ, but my only real observation on NASDAQ, again, is going to be whether or not we're holding outside the August range, so that 2470 range. Basically, again, if we're holding outside of this and we're accepting above last week's high at 24,150s, then there's not really much until we get to 24.5s, to be honest, from a higher time frame perspective. So if we look at the daily chart on the NASDAQ, again, we're sitting right at this 200% extension from this huge trading range. This is the same trading range that we broke out of on the S&P 500, the ES contracts. And you can see the 200% extension from this was basically perfectly this swing high that we had in August that formed this large trading range, and we actually closed the week back above. So there's really not much stopping this from going, 1-2% higher, I'd say, if we're accepting above August highs, which gets us into that 24,500 range. Potentially even a little bit higher, again, as we start to test two deviations away from yearly mean into this blue line right here. So NASDAQ has been a little trickier. It's been lagging, but I think, again, if we're accepting outside August highs, then I'll just look for those long continuation trades to get us up into this range. And obviously we'll be in discovery at that point in time. We'll have to see, how the tape looks up there. But again, same idea here. If we're failing above last week's high and we start offering this 2470 range, then I think testing last week's value, which we closed outside of, down to 23,990s is very natural. And if we start losing 23,990s, then I think, again, this would have to be combined with potentially ES losing some of those larger levels, but moving down into the meat of last week's distribution, down into this 23,850, last week's POC, is quite likely. And again, we could be seeing potentially, potential dip buys happen at the 23,990 level or 23,845. It's going to be, this week is entirely dependent on what happens on Wednesday. So I think Monday, Tuesday, we can probably focus on some technical trades around these levels, and hopefully we have, some tape that's not incredibly difficult with the split of volume. Hopefully we have some clean moves that we can manage. But really what this week is about, the obvious thing is the rate decision on Wednesday. So again, I don't know. I know what the market is expecting, but I don't know what the reaction is going to be. And it's been a long time since I've really kind of been bamboozled on, what the market may want to do. A lot of the time when we have, a decision that's in line with, being priced in, if price is trending higher, it can just accentuate that move or maybe gives a dip buy and you continue to trend higher. We're at a weird place in this market where the comments of, future rate cuts coming in as well and how Fed swaps are going to move could potentially affect bigger things happening. I guess the macro aspect of it. I'm not a macro trader. I don't care at all about macro, but I do care about how it affects price. And we're at a point in time right now where it is going to affect price. So I just have to be conscious of that. I think, being a trader, being nimble in these environments and just basically, waiting to see how the market reacts and what price wants to do after these decisions are made is key To be completely transparent, I think for me, it's worth probably taking some hedges into this. If we do have something change and we get an unexpected move to the downside, especially for some of my longer term ports, I think it would be worth just hedging going into this event because there is risk here. And if those go to zero or if those go into a loss, that's fine. They're hedges for a reason, but as far as being directionally positioned into that decision, I won't be. So I think it's going to be tricky this week. I really hope Monday, Tuesday give us some decent conditions to trade before that decision is made. And I think also too, focusing on markets outside of the indexes is also probably going to be beneficial. I know probably a lot of the people watching this are probably only trading, the Nasdaq, the Russell, the S&P 500, but I would encourage people to have setups and eyes on markets that are outside of the indexes for times when the volatility kind of sucks, or if you're looking at core setups that exist elsewhere on potentially individual names or things like oil, things like gold, some of those commodities, potentially even FX futures as well. Like if you have setups that work and you see them repeat and you see them, if you're testing them on other products, it's always worth having a broader scope of what's happening in the market and where your setups could potentially be. I know a lot of people advocate for being an extreme specialist on one index. There's a few people online that say they only trade the S&P 500 and they only trade one setup. That's fine, but in my opinion, it's not as realistic as having a broader understanding of how your setups affect work on different markets and how they yield on different markets. I think that's also quite important because you could find that being a specialist in one specific product is actually costing you money. And I think that's something that people overlook, is that if you're only trading one setup on one product and you can look at your setup that's proven to work and it works on another that could potentially yield better results, then you're holding yourself back. So I think just be open to those things, especially in weeks like this. So hopefully that helps. A little bit of a rant at the end, but I do think hopefully Monday, Tuesday we can get some movement, and then just be really careful on Wednesday. I know I'm going to be. Again, I don't have expectations for this week. I want this out of the way. I want to see how the market reacts and just go from there. If you like the video, please like the video. Subscribe to the channel if you haven't. Comment if you have any questions. I appreciate your time. Thank you very much.